Let me share my slide. Right, can you all see my slide? Boleh. Ni Webex ni dia lain sikit dia punya layout. I have to find mana. Alright, okay. Thank you. Okay, so before we proceed, so I just want to recap a bit on topic 1, and I really hope that everybody already watched the video and answer the review questions 1. You still have until next week to answer because I give you 2 weeks in order for you, because some of you just registered for the subjects and then you just log on to your My Guru and whatnot. So I give you until next week to complete your review questions, and that is for week 1 attendance. All right, so just a recap what we have in chapter 1, topic 1. Okay, so this subject is about banking and financial institutions, and we are also talking about non-financial institutions. So if you can see here, this is from our topic 1 slides. So I just copy from there. So what we have in chapter 1 is basically about the structure of the Malaysian financial system. Okay, so this is the big picture of when we say Malaysian financial system. So we are talking about this important piece of information, which are financial markets and also partly on Bank Negara Malaysia. So these are basically whatever you have in this chart ni, this is what we are going to learn for the rest of the semester. It looks sikit, but it's quite a lot. Okay, so for financial markets, we have under financial markets that govern our financial markets in Malaysia is Securities Commission. Same goes to other countries, because I believe we have international students here, right? You can see. Yeah, okay. So where are you from? China, is it?
Yeah.
Okay, so is that okay using the Webex there? Are you in the campus or in China?
Not come back.
Oh, not come back yet.
Yeah, in China.
Okay, all right, okay. So if you have any questions or any problems, just let me know, because I'm not using Google Meet because I think some of you cannot access Google from there. Can you access My Guru from there? I think you can, right? What should I call you? Shilong. Can you access My Guru from there?
What's My Guru?
Can you access our My Guru system, the one that, because you will be looking at the assignments and the quizzes all through My Guru portal.
Oh, okay.
Okay. All right. So if you go back to this part, like I mentioned before, other countries, they also have their own Securities and Exchange Commission. So in Malaysia, we call it Securities Commission. So what we have under financial markets, we are talking about 4 broad markets, which are money market, capital market, derivative market, and also offshore market. So we are going to look at the details of this money market and capital market. I think money market, we are going to do money market and foreign exchange market next week. All right, so under capital market, we have equity and also bonds. So you actually already learn about, for example, equity. You learn about common stock, preferred stock. You learn about bonds, bond valuation. So this is where we actually place all these markets under one big umbrella called financial system. So under Bank Negara Malaysia, okay, same goes to other countries as well. They have their own central bank. You can refer to my chapter 1 notes. The details are in that notes. This is just a recap for you before we go into topic 2. So for Bank Negara Malaysia, so in Malaysia, we have 2 bank, we call it institutions under Bank Negara Malaysia, which are a banking system, and another one is non-bank financial intermediary. Right. So for banking system, this is related to your assignments later. We have commercial banks, we have Islamic banks, we have investment banks, and we have other types of banks. We're going to look at this later as well. So for commercial banks, for example, you see we have Maybanks, we have public banks, CIMB. Those are actually the commercial bank, but we can also have the same, under the same company, we have Maybank Islamic. So Maybank is commercial bank, and then we have Maybank Islamic. It is an Islamic bank, and also we have Maybank Investment. So from one bank, it can branch it out into 3 different systems. But some banks, for example, Bank Islam, they only have one wing, which is Islamic Bank. So Bank Islam falls under Islamic Bank. But other banks, for example, Maybank, Public Bank, I think CIMB, and they have their own commercial banks and also investment bank and Islamic Bank, right? So we're going to look at the different types of banks later. And the next one is non-bank financial intermediaries. So these are called financial intermediaries. For example, Provident and Pension Fund, EPF. So very hot topic, EPF now, KWSP, where people want to withdraw their money from our Provident Fund. This is actually for the retirement. We have also DFI, we call it DFI, Development Finance Institutions. We have savings institution, we have insurance companies, and also other financial intermediaries, right? So the detail will be, the details are actually discussed in topic 1. So this is just a recap for you before we move on to topic 2. Topic 2 is actually an independent topic, and it is not directly related to topic 1 or topic 3. Because topic 3 later on, we're going to look at money market for topic 3. So again, looking at the title of this subject, we are looking at both banks and also non-banks. And if you go through the pro forma, you can see just what I shared in the structure, the financial system structure. This is what you're going to do for the next 12 or 13 weeks or so. All right. So, and please stop me if you need to ask anything, or if you have any question, you can just type on the chat box. All right, so our topic 2 here will be on interest determination, which means when we talk about bank, when we talk about financial institutions, we cannot run away from interest. Okay, so here we're going to look at interest rate structure. Because I think some of you might heard, maybe you have friends or your parents, your sister, your brother, they want to apply for loan, for example. How much is the interest now? So people are really interested in the interest. Is it which bank offer the lowest interest for you to make loans? And so we want to know, how do actually banks arrive at the difference rate? Because what we know is that banks, they are profit oriented company. They are doing business to make profit at the same time to provide services to the public. So for interest determination, we are going to look at, first is the interest rate structure and also the determinants. And we are going to look at what we call as OPR, PLR, and also BR. So these are actually the different interest rates that we have in Malaysia. Okay, so what we have in this subject is only related to Malaysia. Why? This is because different countries, they have different financial system, and that is why we do not cover other countries. We only look at Malaysian financial system, but basically it's quite similar to the practice of other countries. All right, so next would be, this is our interest rate structure and determinants. Okay. So again, as just like what I mentioned before, interest rate is an important element in any discussion when we talk about lending, borrowing, fund placement, investment, managing liquidity, cost of business, and many others. So by having a proper interest rate structure, we know how much do we have to pay, how much will we get when we involve in lending and also borrowing. So the financial market participants, they look forward to any announcement of interest rate. Maybe for you it's not really matters now, but in the future when you are going to borrow or you're going to proceed with investment, or maybe by now you already have a few investments, you are really looking forward to the different types of or the different rates of interest. So the regulators set the direction of the rates based on economic scenario, where they don't simply quote certain rates, and they have to look at economic scenario. So as you know, Bank Negara, Securities Commission, even the ministry, they issue statement, first of all, because of the crisis between Russia and Ukraine. So that will definitely affect the interest rates. In fact, not only the interest rate, also the employment rate, supply of goods and services. All right, so what about businessmen? They will anxiously of any announcement as well because it will have direct impact on their business decision. For example, what happens if you export your product to Russia or Ukraine? They have restrictions, kan? And then if they, for that particular country as well, if they export goods to certain countries, so kita ada, we call it economic restriction. So because of the political instability, there is an economic restriction, so that will definitely affect the business decision. So as for you and me, the households, we also look forward to interest rate level for any investment and also borrowing decisions. So this is why interest rates determinants is very important for us to understand the behavior of the interest rates and also what are the determinants of interest rate. We know it is affected by the environment, by the a lot of factors, but we are going to look at that in detail later. All right, so the definition basically literally interest rate means the price of borrowing money. So you borrow money, that is the price that you have to pay. You cannot say that you borrow RM1, you pay back RM1, not with the bank. With your friend, okay, you pay RM1, you pay back RM1. You borrow RM1, you pay back RM1. So here it is the amount charged by a lender to a borrower from borrowing a sum of money expressed as percentage of sum borrowed. So interest rate is quoted in terms of percentage. So any changes in interest rate will have an opposite impact to both parties. So as logically, if you lend money or for banks, for example, they lend money to us, they want a better rate to get a better return. But for us, the borrower, we want a lower rate. So any changes, so if the interest rate goes higher, so it will benefit the banks, but it will give us certain disadvantage because we have to pay more interest rate and more interest because of the fluctuations. So, all right, there are the nominal and in real interest rates. So I will go through this one very fast. We are not going to calculate any interest rate so far, just to introduce to you the different types of interest. So we have nominal interest rate and the contract interest rate charge, the gross rate without considering inflation rate. We also have annual percentage rate. So normally rate is also quoted in terms of annual percentage. Per annum, we can see PA at the end of the certain percentage too. That stands for per annum, per year. So this rate normally is the rate after considering the inflation rate. So this is the simple formula for a nominal interest rate minus inflation rate is the real rate. And this is the simple interest rate. So this is how we calculate the interest rate. So the interest amount is the principal. Let's say you borrow 10,000 ringgit of money. You want to pay back in 1 year. 1 year means 365 days at a rate of 2%. So the interest amount can be calculated based on that figure. We also have fixed rates and variable rate. So just looking at the term, fixed and also variable. Fixed, okay, fixed is only one interest rate is quoted throughout the life of the loan. Okay, that is for fixed rate. And for variable rates, is the rate quoted. Okay, we talk about fixed rate first here. So fixed rate, only one interest rate is quoted throughout the life of the loan. So the amount of monthly installment to be paid would be the same. However, the fixed rate will expose banks to interest rate risk, especially when rates are volatile, because the amount of monthly installment to be paid remain constant. So when the interest rate goes up, rugilah, because they already charge certain amount. But if the interest rate goes down, then okay. But that is why we also have variable rates. So variable rate varies from one period to another. So the rate floats or changes since it is back against the bank's benchmark rate, and we call it the base rate or the BLR. So we're going to look at the BLR and base rate later. And also OPR, so there are different types of rates that we have here. So for variable rates, the advantage is that it protects both the borrower and lender against fluctuations of interest rate. So you can see from here, for borrower, they prefer if the market interest rate goes up, for the borrower we prefer the fixed rate, because when the rate goes up, it doesn't affect us because we have that fixed rate. Alright, so for a lender, they prefer a floating rate. For lender, they prefer a floating rate so that they can get extra profit from that. And for example, for these variable rates, usually charged on credit card facilities or higher. Alright, in this case, we have BR. BR here means base rate. We are going to look at that rate later. So if, for example, if the base rate increase, the rates on variable loan increase and it is translated into higher monthly payments. So in this case, for a borrower, when the interest rate increase, so they have to pay more, higher monthly payment. All right. Next one is the reference rate. So here, this is where we have to learn about, as I mentioned before, we have OPR, BR, BLR. Okay, so reference rate, first one is OPR, right? OPR is overnight policy rate. It is the main reference rate in determining other markets in the financial market. Remember that the umbrella just now, we have the financial system, we have Securities Commission, we have the banking system. So the rate is actually controlled by our bank negara. Okay, the monetary policy is actually controlled by bank negara, and they come up with this OPR, overnight policy rate. This is rate banks borrow money between banks. Don't just imagine that we borrow money from banks, and banks also borrow money from other banks, and they use this OPR. They don't use our simple interest rate, they use this OPR. So this OPR will set the tone of other interest rates, whether interest is going higher or going lower. So this is the indicator of the monetary policy of bank negara. So for example, in this case, throughout the course of a day, banks will transfer money to each other, to foreign banks, to large clients and other counterparties on behalf of clients or on their own account. This is how bank works. So they transfer money here and there, foreign banks, client or counterparties. At the end of each working day, they may have a surplus or shortage of fund. Let's say they have a surplus. Okay, they have a surplus, they can give other banks to borrow. Or if they have shortage of funds, they need funds from other banks to be transferred to their banks, and they use this rate. So for example, banks that have surplus fund may lend them to or deposit them with other banks who borrow from them. Okay, overnight rates are a measure of the liquidity prevailing in the economy. Overnight, one night, sorry, it's called overnight policy rate. So in a tight liquidity conditions, overnight rates shoot up. So overnight rates may also shoot up due to lack of confidence amongst bank. Ini 2008 atau we all dah lahir ke belum. So those days, the OPR can be really high, but I will share with you later the statement. You can look at this statement. Because of the COVID pandemic, the OPR goes really low. This is actually to regulate the economy and economic situation. Right, you can see from here, 9 September 2021, I haven't checked the for 2022 yet, but as at end of last year, the rate maintains at 1.75. Right, so they meet every 3 months, and this committee, and they come up with a new OPR level. Okay, so in 2020, 1.75, but you can see in May 2020, 2%. And then if you look at from in 2018, it's very high, and then it goes down 3%, 2.75%, 2.5, 2%, and this is the lowest that we have, 1.75. So this is the OPR, which is the rate of banks when they borrow or supply money to other banks and between bank and banks.
Doctor.
Yep.
The OPR rate is for the all bank in Malaysia or
Malaysia. This is for Malaysia bank. Yep.
So semua sama lah, semua bank pun.
Yes, semua sama. OPR sama. Nanti kita tengok after OPR OPR is the, kita kata, the general interest rate and then when we come down to the customer, just like you and me, kita guna rate lain but based on this OPR. So the lower the OPR, normally the rate will be lower. The higher the OPR, the rate lain pun akan jadi higher. We'll come back to that later for base rate nanti. Alright, next one is BLR. We call it BLR, base lending rate. It is the rate calculated by financial institutions. Okay, ni bank sampai dekat bank. OPR comes from bank negara. Bawah bank negara we have other banks lah. So these banks, they use BLR, minimum rate calculated by financial institutions. Okay, so this bank, this BLR can be different from one bank to another. OPR tak boleh, OPR mesti sama je the calculation dia nanti. So what banks do is that they take into account the cost of funds and other administrative costs. So normally this is the rate used by commercial bank as a basis to quote for lending and advances to customer. Let's say you want to make loan, personal loan, they kata, okay, the rate for this loan is BLR plus 4%. Oh, tinggi 4%. So BLR, they use BLR as the base, nama pun base, base lending rate. So BLR plus something percent or BLR minus something percent. So BLR is always almost the same amongst major banks. So, but for this BLR ni, dulu a long time ago, we used this Clibor to calculate the funding cost. This is the loan and interbank rate for this Clibor ni, 3-month rate ni. And back in 1999, lama dah ni, they revised the rate based on BNM and they call it intervention rate. So bank negara interfere. And alright, based on this PLR ni, it is made by banks at almost the same time. So banks must remain competitive. You cannot, certain bank cannot put a very high BLR because they have to compete with other banks. That is why if you look at this sentence, mana tadi? Almost always the same amongst major banks. That's why if you go to Maybank, you go to public bank, you want to make loans, normally the interest rate is quite similar. Just that the difference sometimes comes from their after sales service or other services or other benefits lah, but not the rate. The rate is quite similar. And BLR is usually adjusted at the time in correlation to the adjustment of the OPR, which is determined by bank negara during monetary policy meeting. So this monetary policy meeting, as saya cakap tadi lah, they meet every 3 months and they come up with a new rate. But 1.75 has been there for quite some time, daripada, I think from May 2021 until now. Alright, so this is the computation for BLR. Okay. Yang atas ni tak payah tengok lah, this is the old calculation. Look at the new one ni, BLR equals to OPR, the one that comes from bank negara tadi, plus and minus the cost structure of the bank. So different bank, they have different cost structure, but the interest rate normally quite similar. This is the old data, I just skip this part because BLR is also considered as old. So at the global market downturn, BLR will get lower, and if the money market on uptrend, it will increase upward. So the highest would be what we have in 1998, 12.27%. The lowest is 5.5% in 2009. Okay, again, when we have these different rates, bank negara always find ways to make sure that our rate is actually competitive with other rates and also other countries. So they revise the BLR to reflect the trend in the expected inflation rate, because with the inflation rate we cannot do anything, and we have to embrace the increase in the inflation rate, and then Bank Negara has to come up with a very strong policy so that it can strengthen the economic growth. Because if you read even nowadays during the pandemic, EPF never allow withdrawals before this, except for certain reason to further study and a few other things, or most importantly, the withdrawal is when you reach the age of 55. But now they open for either lump sum 10,000, all those ICNAR, whatever, saya pernah lupa because there are a lot of withdrawals before. And before this memang tak ada, there's no such thing as withdrawal from EPF. So because of the economic situation, the political situation, the health situation in the country and also worldwide, so Bank Negara has to come up with a different approach. So for example, for this BLR, they also revise the BLR ni. 2015, Malaysian financial system, particularly Bank Negara lah, Bank Negara introduced a new rate pula. It is called base rate, BR. So base rate is more transparent and based on borrower's credit risk. If you look at the formula for BLR tadi, nampak kan? BLR is OPR plus minus cost structure. And that cost structure is hidden. We do not know the bank's cost structure. So they just simply quote us the whatever rate that they want based on OPR. So it is not quite transparent. So when Bank Negara come up with BR, base rate, it is more transparent and it is actually based on borrower's credit risk. So the lower your risk, the more you can borrow. Macam itulah Alright, so how do Bank Negara come up with this base rate? It is actually determined by the financial institutions, benchmark cost of funds, and also considering the SRR. SRR is statutory reserve requirements. So for your information, all banks in Malaysia, they have to put certain money in Bank Negara as their SRR. That is why we never saw any banks in Malaysia got bankrupt. Tak boleh, because bank really have to maintain the reserve with Bank Negara, because for us to see other companies, other business to go bankrupt is quite normal, but not for banks. If there is banks in certain country that goes bankrupt, it indicates a very weak and also unstable economic policy. Because how come you cannot maintain or make sure that all the banks actually survive? So in Malaysia, we have this what they call SSRR, statutory reserve requirement. So banks have to put certain amount of money in Bank Negara, and a big chunk of it comes from cash, dalam bentuk currency. That money itu dalam bentuk currency in Bank Negara. Nanti later part of the semester, I think we are going we also have topics on this SRR. So in this case, what banks do is that base rate is normally lower than BLR, so it is added to a specific rate equivalent to the level of risk of borrower. So like I said, the higher the risk of the borrower, the higher the interest rate will be. Okay, the lower the risk, and the lower will be the interest. So in this case, for this base rate, for commercial banks now between 3 to 4%, and BLR between 6 to 7%. I think I have in these notes also the different rate. Right, so this is the base rate, this is the BLR, and the effective lending rate. But this is in general, but again, it depends on the borrower's credit risk. Later we are looking at the what does it mean when we talk about credit risk. And bank will use that extensively in order for them to decide whether to give you loans or not, whether to give you how much loans. They also need this base rate. So these are the rate. As you can see here, it is quite similar. Bangkok Bank is a foreign bank. CIMB local bank, Citibank, foreign bank, Hong Leong local bank. Okay, so this is the indicative rate here. Okay, I also have some from Islamic financial institution. Okay, so this is the rate with Islamic institution. So this is what I explained before. For example, Alliance Bank, they have Alliance Bank, the conventional part. They also have Alliance Islamic Bank. Okay, the Islamic window. I have to shout dekat sini hujan lebat ni. I hope you can still hear me. And we also have DFI, Development Financial Institution. For example, Bank Rakyat. Bank Rakyat is not a commercial bank. Agrobank is not a commercial bank. BSN also is not a commercial bank. They are development financial institution. It is developed untuk accommodate certain group of people and also certain projects, especially government projects. So macam Agrobank kan, this is actually for pertanian, for agriculture. So they provide loan for agriculture. Alright, so the indicative rate ni represent annual rate for a standard 30-year housing loan with financing amount of 350k and has no lock-in period. So yang hujung ni, column yang hujung ni. Alright, we also want to know the relationship between rates. Alright, again, so this rate, we start with OPR. So OPR is set by Bank Negara and it is actually derived from the level of interbank rate. So OPR is between banks and banks. So the interbank rate ni average rate and they lend and borrow money among themselves. And based on this OPR, they set base rate to decide on the rates that will be given to the borrower. So the relationship, all right, this is the example. This is from Bank Islam. Okay, so you can see from here. Contoh saya pun tak nampak, I cannot really see, this is quite small. Alright, so this is the promotion, this is from Bank Islam. So dia kata dekat sini, save 686.34, reduce your monthly commitment and save more. Okay, this is example, basic salary 5,000, home fixed allowance, total income 6,800. So this is the deduction income tax and this is the net salary. So what Bank Islam does is that they want, this is the promotion, different banks, they have different promotion and also different group of customers that they target. So enjoy low financing rates, financing up to 200,000, tenure up to 10 years, fast approval, doorstep banking service. Okay, what we can see from here is that I want you to look at the term. If you borrow and pay back within 3 years, look at the rate. Lower kan? PLR plus 2%, 2.12% if you tenure for up to 3 years. But if you borrow up to 10 years, base rate, BRE base rate plus 3.02%. That's why base rate ni fixed. Base rate, so bank will, the difference between Bank Islam and other banks is this part lah. Base rate ni, they will all quote BR, base rate. So here base rate is 4.03 per annum plus 3.02, which means 7-something%. Here 4% plus 2, so 6% or 6% something, this part. So the longer you borrow, the lower the interest would be. So the longer, the shorter you borrow, sorry, the longer you borrow, the higher the rate will be. Okay. So this is the installment schedule. The small print, you really have to read the small print. Boleh cakap dekat bawah ni. But this is the basic, this is for personal financing. And for your information, the personal financing or personal loan ni, the rate is higher than car loan and also housing loan. Personal loan is, the rate is higher. So kalau tengok dekat sini up to 7%, 7% per annum. Tinggi, it's really high. For example, you borrow 200,000, you pay back within 10 years, you have to pay monthly installment of 2,300. So if you multiply 2,300 with 10 years, Definitely more, a lot more than 200,000. And so that is the interest charge to personal loan and also other loans. So this is the example from Bank Islam. I can't remember which year this one, this flyer. But don't worry, one of your assignments later on is actually to find out the product and services provided by the different commercial banks, and you have to present later to the class. So the relationship between rates, so this is where this is the part that we are really interested to look at. The increase in interbank rate will change the direction on the OPR, BR or BLR, and finally the lending rate. Remember the table tadi tu, lending rate yang hujung sekali, the rates yang after you modify or you plus minus the base rate tu, right? The lending rates and this part. Okay, so this part or this part, okay, this part. Lending rate. So this is base rate. Base rate comes from kat depan ni sepatutnya ada OPR lah for each bank. OPR and then base rate and base financing rate, and this is the lending rate, the rate that the bank quoted to the customer. So this is the relationship. The OPR increase, for sure base rate will increase and the lending rate will increase. So dia positive relationship, satu naik, lain semua naik, satu turun, the rest will also goes down. So the lending rates are the rates quoted to bank customer for various type of financing such as business, housing or personal financing. Okay, because the higher the OPR, bank will definitely charge higher rate to customer. Right, remember OPR is the rate between banks. Let's say one bank ni, they experience shortage of funds. So they have to borrow from other bank. If they have to borrow, they have to pay back based on this OPR. Higher OPR means they have to pay more. Betul? So higher OPR, they have to pay more. So when they want to make loan, give loan to us, of course they want us to pay more because they also have to pay more for that certain amount of funds. So the relationship is positive. Higher OPR, higher base rate. Ultimately, we are going to have a higher lending rate because the customer ni, the rate for customer is actually here. So kita dah go through the OPR and also the base rate. So this is the customer's rate untuk housing, personal finance and everything. Okay. Alright, banyaklah kan. We have OPR, we have BLR, we have BR. Coming soon, this August is SBR, Standardized Base Rate. Bank Negara again, they revised the rate framework and this will take place in August 2022. It is called standardized base rate. So all the banks will no longer use BR or BLR. They can use this SBR as a common reference rate for their new retail floating rate loan. So it will be linked solely to OPR. So macam tadi you can see OPR, BLR or OPR, BR, and then we have this effective lending rate. So here SBR direct with OPR. Tak ada BR or BLR di tengah-tengah tu So this SBR will be based on this borrower's credit risk, liquidity risk premium, operating cost, profit margin, and other costs that will be will continue to be reflected in the spread above the standardized base rate. So again, we look at the improvement from PLR, and it is said BR is more transparent. So SBR is actually a new version of SBR lah, a new version of BR. And again, the ultimate objective is actually to be more transparent to consumers because we want to know, you charge me 5%, what are the component of that 5%? I want to know. You charge me 10% interest rate, I want to know what is that 10% interest rate. So we want to know, the customer needs to know, and that is why they try as best as they can to be transparent to the customers. And the shift to SBR will have no impact on the effective lending rates on existing retail loans. So yang tadi we look at brochure Bank Islam tadi tu. So that effective lending rate ni will continue to be referred against the BR and also BLR. Okay. As of now, as we speak, banks still use BLR and BR. But after August 2022, you see, after the effective date, the BR and BLR will move exactly in tandem with the SPR, as any adjustments to the SPR will simultaneously be reflected in the corresponding adjustment to the BR and BLR, right? So the next time you see brochures about loans or financing, so you can see what is the base rate, what is the BLR of that particular bank. And again, bank will continue to display their BR and BLR. Okay, they have to display even after August 2022. So we still know what is the base rate and also the base lending rate. All right, so I just mentioned to you the SPR. So how do they actually calculate the SPR? So the SPR is set as the benchmark rate. So they follow the OPR, okay, and plus spread. So it's quite similar to BR tadi lah, yang plus minus the borrower's credit risk. Next, we have what we call a loanable funds theory. Right, so in this case, interest rates are directly correlated to the fluctuating supply of funds. This is not only for funds. Kita boleh tengok other things as well. The supply and the demand. So the more supply, of course, the price will go up. And the more supply, the more demand, of course, the price will go up. And then here, interest rate directly correlated to the fluctuating supply of funds and the demand of those funds. So biasalah the equilibrium is where the market, where the supply and demand intersect. Ni tak ada apalah. So next would be the demand for loanable funds. So who, from where does this demand come from? For this fund, for loanable fund, why we need loans, why we need to make loans. So first of all, yang tengah sekali, we can see the government demand. So government has to finance a lot of projects. And they also need loans. So they make issuance of money market in the capital market. Later on kita boleh tengok lah. So these loanable funds comes from government demand, business demand, of course, business expansion. Household demand, we also need loan for whatever purpose lah, for your business, for personal, for housing, for your car. Foreign demand, because we have foreign exchange, we also have foreign business import and exports, so they need loans as well. And last one is the aggregate demand. So ini tak ada apa lah, more like the different types of demands that coming from different institutions. So this is, I think, a normal equilibrium point lah. You can see that where the supply and demand intersect, so that would be the equilibrium market interest rate, where the supply, where the demand is equal to supply. So the shift in demand and supply will cause fluctuations in the equilibrium market rate of interest lah. So again, so the higher, the more demand, the higher will be the interest rate. Kencang. Okay. Patut dah gelap. Alright, okay, so we just gone through the different types of rates, and we know in Malaysia the OPR, the overnight policy rate, is determined by monetary policy of Bank Negara, and then we have the base rate and also the base lending rate, and the new rate starting this August would be standardized base rate. But we also want to know what are the factors affecting the interest rates. They do not simply bangun tidur, okay, hari ni kita letak rate 2% lah. No, they have these different factors that is related to interest rates. So first of all, we have inflation. Alright, so for inflation, the higher the expected inflation, the higher would be the level of interest rate. So again, we call it as a positive relationship. If inflation goes up, the rate of interest will also goes up. If the inflation rate goes down, then the rate of interest will go down. Next is real interest rate. Okay, so the rate will exist on a security without any expected inflation over the holding period. And it is a percentage of change in the buying power of a dollar. Also a positive relationship. If the real interest rates increase, then the interest rate will also goes up. Default risk. Okay, from now on, you will see a lot of, we will discuss a lot about the different types of risk. Nanti later kita ada lagi, we are going to look at again on this, for example, liquidity risk, default risk, ada lagi nak akan jumpa in the next topic. So the default risk, when we talk about default risk, it is actually the risk that the issuer will not pay the interest and principal on a timely basis. So remember, when you make loans, you have to pay the principal and also the interest. For example, macam tadi you look at the Bank Islam tadi kan, let's say the principal amount you borrow is 10,000. 10,000 plus plus, the payback would be 10,000 plus plus. So plus plus would be the interest. For example, kita ambil 10% lah, 10% interest from 10,000 is 1,000. So you have to pay back 11,000, which means 10,000 principal, 1,000 interest. So the default risk is that this borrower ni cannot pay the interest, the 1,000 ringgit tu, they cannot pay 1,000 ringgit plus the principal lah on a timely basis. For example, you have to pay every month. Setiap 30 hari bulan you have to pay. Every 30th of the month. Tapi cannot pay. So it is called a default risk. This is actually the rate demanded by investor to compensate for the risk exposure. So the higher the chance of default, the higher is the interest rate. For example, that is why you want to make loans. Certain banks, they need your payslip. They need to look at, they do all the credit check, all the background check, secret, CITOS semua tu. Those are actually to determine the default risk. Meaning, if they give you loan, this new loan, are you able to pay back? Or you already have a lot of loans taken, and if they give you another loan, you cannot pay back, and they are actually exposed to this default risk. So in order for them to give you loan, they will charge you a higher interest rate. Okay, boleh faham Next is liquidity. Okay, liquidity here means the securities will be easily sold at expected price. So here we are talking about liquidity assets, the money market, for example. So the highly liquid assets carries the lowest interest rates, and for illiquid assets, investor will add a liquidity risk premium. So this one, the relationship is inverse. Kalau tadi positif kan, high default risk, high interest rate, high inflation, high interest rate. But for this one, liquidity, highly liquid asset, low interest rate. Time to maturity. Okay, just now you saw the brochure from Bank Islam. I show you, if you borrow within 3 years, the interest is lower. If you borrow more than 5 years, the interest is higher. Why? This is because the longer the maturity dates, the higher is the interest rate, because the banks need longer time to collect their money. That is why the longer you borrow, the more you have to pay, because of this factor, time to maturity. It is actually the length of time security will mature. And the change required interest rate as maturity changes is called maturity premium. Okay, so the basics or the general idea behind this is actually the length of time the security will mature, and it will affect the interest rate. So the easiest example is to go back to that Bank Islam brochure. The shorter period you pay, the lower the interest would be. Any questions so far? So these factors affecting the interest rates are very important. You have to really understand, because later on, we will still see some of these factors appear in other topics as well, especially on the risk part. Any questions? Tak ada boleh All right, next I will talk about your assignments. Share with you. Right, for your assignment 1, I already uploaded the assignment question available today at 2 just now. Okay. Just ignore the date and I will update you the submission date later. All right, so what we have in this assignment is that I will show you the instruction. Right. So assignment 1, 10%. So in a group of 3 person, you have to choose a commercial bank and get its latest statement of financial position, which is 2021. What you have to do is that you have to identify the item on the asset side and the items on the liabilities and equity side of the statement. Calculate and determine the item that contribute the most to the asset and the item that contribute the most to the liabilities and equities. Descriptive here means you just report the percentage. Let's say the percentage ni for this asset, for this bank, how many percent is asset and what are the different items under the asset column. And you need to prepare a slide presentation for 5 minutes. 5 minutes tak nak panjang. And I want your answer in infographic. You can use any apps that you like and Canva, Pictochart, Infogram, whatever, and only this one also abaikan because I will show you the submission in my group where I already set the group. Saya tak sure you all dah tengok ke belum but this is what I have set for you for your assignment. Okay. Right, tak nak gaduh-gaduh. You can look at this. Boleh nampak this is my screen on my guru. Boleh nampak kan? There are 25 of you. I've set 8 groups. Okay, so these are according to your assignment, you have to choose a commercial bank. I already put here the types of the banks that I want you to choose. Saya tak nak you all choose foreign bank. I want you to choose only local bank. So we have Afin, maximum 3%. So you have to add your name here. Go to my guru, discuss with your friends. I need 3 in a group for Afin. For Alliance Bank, maximum 3%. M Bank, CIMB 3, Hong Leong 3, Maybank 3, Public Bank pun 3, and RHB 4. 25 of you, so 8 banks, so 25 lah, everybody. So you can discuss who wants which bank, or if you already have 3 of you, then you can choose any banks that you like here and just tag your name here for this submission. Because later when the group member or the group leader submit, so automatically you will be in one of the groups. So please choose, because it is not difficult to choose this pen because the information are all publicly available. Just that you have to do some analysis. Okay, any question tak about the assignment? Okay, so your task would be identify the assets and liability and also equity. Prepare a presentation. You can present different slide or you can present your infographic as well. Pun boleh. But please make sure I didn't put the instruction in the ni. When you prepare an infographic, please make sure you have your name there. I have a lot of groups and they have this very nice infographic tapi tak ada nama. So when you submit, I have to search block. Okay, this one belongs to which group, belongs to which student. So please, in your infographic, tak kisahlah anywhere at the top, at the bottom, you can insert your name, the group member's name. Looks simple, but a lot of you didn't actually write down or put down your name there. A very nice poster, but no name. I need names, so that easier for me to mark and grade you your work if you have the name. And under this assignment as well, you have the question, right? This is the rubrics. This is how I will grade you. So the marks will come from certain areas. So you can download this as well to use this to benchmark or to get some ideas how you will be graded for this assignment. So all the assignment will be provided together with the questions as well as the rubrics, so that you can see where you can obtain the marks or the highest marks. Okay, I also uploaded for topic 3, money market. It's quite a lengthy topic. And if we have no question, I think I will see you again next week. And for next week hari bulan lah. Next week.
5 hari bulan, Doktor.
Event sebenarnya 5 hari bulan tu, tapi tak apalah, we start class at 2 next week. Hari ni I have to start a bit late because I have meetings dekat kampus lama tadi, so saya balik sini pun dah almost 2, so tak sempat nak start awal. For next week, I think we have to start at 2. And if ada changes in terms of time, I will let you know. So please make sure everybody is in the WhatsApp group. Saya pun belum check lagi semua orang ada ke tak. So that would be our medium of discussion lah. And please do not forget to answer your review question number 1 for your attendance last week. And for next week's and future classes, please log on through my guru, to this class through my guru, because I can automatically download your attendance. So how many of you do we have today? 25 plus myself. Should be 25, but I understand some ada masuk, ada keluar because of the internet connection. So if you have no questions, I think that's all for today. I will see you next week. Don't forget to download the assignment question and also submit the review question number 1. You have until next week to submit. Okay, I'll see you next week.